Hi, this is Mark with Right Line Trading. It is August 13th, 2015. I wanted to go over today's trading with you. Today we had a really nice day. First, let's go over bonds. Now, bonds was a great trade at 8:34, and I was 15 minutes late getting into the room. Normally I'm in at 8:15, and I just missed this trade, which was really, really a shame. And let me show it to you. Now we have one quant line red, but what it is it's a break of the 50, retracement right back to the 50, and the modified 15 is heading down hard. You can see we're only one candle away from background bias. This was a 7-tick trade on bonds. It was a tremendous trade. That was a $500 trade. When early bird catches the worm, we would have caught this trade and we would have taken it out. Then a lot of chop here, and really respecting that value area low saved you a lot of losers here. Right here, there's no break of the value area low. No, you don't. No trade right here. No break. You need a 2/3 candle close. Even with dual quants, you just can't guarantee a break. And background bias as well. Now this was a I was showing this to the traders in the room. It's a very tough trade to get, because you want to break the 50, come right back to the 50, and you do it on a hanging man. And it actually is a very bullish candle, because bears tried to take the market all the way down, bulls brought it all the way back to close right where it opened. Now you could have taken the entry here, but that was a very, very aggressive entry. It went a nice distance, but it was a bit of a stretch and a tough entry. This was a great short. This was a very aggressive long on bonds. And then after that, this is after we close the room, and it always happens. There's the move up, and look at that short. That is, I can't tell if it's right into the point of control or not. It looks like it's close, so that might have made it a tough trade. You don't want to trade into congestion. So that was a tougher trade, I think, than it looks. But you can see it really ran and just went right through the point of control. Now, we had no trades on bonds, though. This was after the room closed. There was no decision on that. This was before I got into the room, and that's a very, very aggressive entry. Now the ES, now that's 9:24 before the market opens, and it's always tough to take a pre-market trade. This was on a multi-candle retracement. Now we did have the quants, and down it went, but I elected not to take the pre-market trade. Now this candle actually broke the modified 15 to the upside. So you really couldn't trade it until you got to here. And it's a potential trade. I don't like these multi-candle retracements. That's the problem. I want to get a single retracement and then a move to the downside. And then we had that. This is sort of that same kind of very aggressive bond trade. The break of the 50, quick retracement, and move up. Now, I just thought it was too dangerous to take. We're taking it against the direction of the higher time frames. If you're simply a price action trader and you don't care about the higher time frames, which I believe is a mistake, then you are going to take this long. But if you're just a price action trader, you're not going to have market profile, which is an indicator, and you're going to get burnt. And after that, there was just nothing. Now the room is closed here. We were done when we got that continuation signal. And this was a break in retracement here, but the 15 is below the 50. And I would not take that trade. And in addition, you can see you've got your point of control right there. So problematic or aggressive, but that really is a potential trade. Once you get the move up and the quick retracement back. These multi-candles I do not like. Now the system is 85% price action driven. Now on crude, we got all our trades today. Now the first trade was a move to the downside, retracement, down for 10 ticks. Now next trade was a nice trade. It was moved it to the downside and the upside, but if you look on the right edge, I took it into the value area low. I thought there was an opportunity here to break it. Darkest background bias, 1550 heading down hard, order flow and momentum on the trade. It went a couple of ticks in our favor, then it came back and I had everyone move to -2, and it took the trade out. Then remember I told you about trading the bearish hammer. Well, I took it here, and boy, did it give me a lot of heat. There's this candle, then this candle, then this candle. I finally took it out at +1, and it wound up going 15 ticks. So then I took the retracement, and it went for 9 ticks. And then finally, we had the move down, the retracement, the move down. I took all 3 contracts out at 4. So you can see price action trading is complex, but it is the key to being a successful market trader, and what we spend most of the 2 months in the mentorship program going over. That's a potential. You have a break, and it's a retracement, but it's also a double top. And in a way, it's a retest. And this is what we go into when we trade. So here's how we did today. We had 5 trades, 4 winners and a loser, and the loser was only 2 ticks. We had crude +10, 1 contract at 5, 2 at 8. We had 15 ticks. I took all the contracts out of 1 tick. It just sat and sat. It went 5 against us, 3 with us, just going back and forth. So I closed it with a little bit of profit, and it went 15. Then I had 9 ticks. We took 1 out at 5 and 2 out at 6. 4 ticks, all 3 out at 4. Then -2 ticks, which was 3 contracts at 2 ticks. Net ticks 36, net equity $470. Auto Trader had no trades. So we did really, really well today. We wound up just trading the ES, but very profitably. So I really welcome everyone in the room on a free trial. You also get a free demo of our software. No credit card, no money. It's no obligation. And go to www.rightlinetrading.com. There you'll see, actually it's not a link now, it's a button to sign up for a free trial, a button to see our daily net equity in the trading room, a button to see our daily net equity for the auto traders, and a contact us page also. And you can email us directly at info@rightlinetrading.com or call us at 1-855-765-6681. And we really look forward to seeing you in the trading room. You will learn in the mentorship program how 85% of the market is really driven by price action. But the fact that you trade with higher time frames, like this dark pink, tells you that all your higher time frames are with you and all resistance or all support to the downside's broken. That's an immense advantage, because even a price action trader wants to trade in the direction of the trend, into the direction of the higher time frames. They'll usually put up a 60-minute chart, but they need additional information. You don't need that. Everything is obtained right off this chart. And also, you know the direction of order flow and momentum just by looking at the outline of the candles. If the candle's outlined in red or yellow, you have order flow and momentum in your direction on multiple time frames. And all of these increase the predictive value or success of your trades. And that was a trade that, you know what, I forgot to, and that was one of the trades we took. This nice move into consolidation, and that's price action. The market consolidates, the bears and the bulls are equal in power. Which way is it going to break? Out of consolidation, out of this low volatility zone. It's going to break in the, most likely in the direction of the trend. Well, background bias defines the trend on the higher time frames. You can see the 50 and the 15 define it on your trading chart. And this was a really, really nice trade right out of consolidation. So that's it for today. I'm just scrolling this chart. I'm already in the middle of the night here. But that's it. So hopefully we'll see you in the trading room. We made almost $500 today. We're having a great week. And we look forward to seeing you there. So everyone have a wonderful afternoon. Take care.